Financial management refers to the part of management activity which is concerned with the planning and controlling the funds to maximize the earnings of the firms. Designing about what kind of sources that you're going to get from the capital, what kind of capital you're going to get, and how much you're going to pay to them. Financial management helps to determine the financial requirement of the business concern and leads to take a financial planning of the concern. Hello students, I welcome you all to the first session, that is the introduction session for your financial management subject. So before we move on into the detailed aspects that we're going to cover in this today's session, so let me introduce myself. I'm Vaishnavi, Faculty of Commerce from Vidhyaashram First Grade College, Temple of Excellence, MYSURU. So today's session, we are basically going to talk about the basic concepts of financial management. Like what is the meaning of the financial management, definition of the financial management, why it is important, what are the factors that influences the financial management, so what is the qualities of a financial manager. So all these kind of basic concepts about the financial management we are going to see. So we'll straight away move on to the session. So starting with the agenda. So we are going to start with the introduction part of the financial management. Next we are going to learn about the meaning of finance. Next, we are going to learn about aims of financial functions. Next is importance of the financial management, why it is important to maintain or to have a key eye on the financial functions of a organization. So we are going to learn what is the importance. Next, we are going to learn about functions of financial manager. Next, we are going to learn about steps in financial planning. Next topic we are going to learn about is essentials of good financial plan. Next, we are going to learn about factors influencing the financial plan. So all these are the basic important concepts for your examination point of view as well. So please have a key listen to this, whatever that we're going to discuss now. So straight away, we are going to talk about the introduction. Yeah, so financial management. So what is a financial management? Say, for example, like we'll take a basic daily life example. Okay, so every day or like monthly, you will be having some financial expenses. Say if you are a person who are earning like 30,000 to 40,000 a month. Okay. So now, as the earning person, as a salaried person, you are supposed to manage your finances. So we'll take an example of a married man. So as a married man, so you will be having some expenses on your hand. So you need to take care of your family, you need to take care of your wife, or if you have any kids, you need to take care of your kids. So their schools, their education expenses, or like daily needs, that what they need in their daily life. So in each day, we will be having different expenses. Okay. So right from the time that we wake up until we go to our sleep. So we will be having some small expenses, petty expenses, as well as we'll be having some large expenses like paying the rent, electricity bill, water bills, paying for insurance, managing your savings, etc. So now, why it is important here? Because so once you reach a certain age, like once you have reached certain age of like 50 or 60, so there will be like no more energy in your body to work further sometimes. So during that time, so whatever the savings that you have done, whatever the managements that you have done, that savings or that financial management will help you to attain a greater level or will help you to have a peace of mind in your retirement age. So this is in the perspective of only personal. Now, if you are going to talk about the perspective of a company, so a company also will be having the daily transaction expenses or monthly transaction expenses or annual transaction expenses that you're going to get. So as a company, you need some money to run your business. So you need some money to purchase raw materials, you need some money to purchase any equipment, plant or any machinery, you need to purchase it, or you need some money to give salaries to your employees or some kind of petty expenses for your businesses. So financial management will teach you how you have to arrange or organize those kind of expenses. So say for example, if you're having some lump sum of amount in your hand for your running of your business, you are having some lump sum amount now. So how you are going to organize it? Okay, how you are going to spend your expenditure, how you are going to make sure that you are not going into losses, All these comes under the basic concept of the financial management. So we'll see the introduction part. So financial management refers to the part of management activity which is concerned with the planning and controlling the funds to maximize the earnings of the firms. So we are talking only on the perspective of a company or an organization. So financial management is all about what? Planning. That's what I've told. Planning. How much expenses that you're going to incur in future. So planning, forecasting and controlling those expenses. Why we need to control or why we need to plan? So that we can get or we can earn more earnings in future. Okay, that's the basic objective of a financial management. So why we plan now? So that we can reduce the sudden expenses or we can reduce any kind of uncertainty risks that we are going to get in future, and so that we can save our company from incurring losses, and we can also get more earnings for your organization. So that's the basic objective, or that's the basic introduction of the financial management. So in other words, financial management refers to the procurement and use of funds in such a way that the cost of funds is minimized and earnings are maximized. So as I've told, so it's an art or it's a kind of a logical planning. For what reason? To minimize your cost and to maximize your income. So that's the basic introduction of the financial management. So let's move on to the definition of the financial management. So definition, according to Raymond Chamber of Defined Financial Management. So he's an author, he's defining that financial management may be considered as a management of the financial functions. It may be described as making decisions regarding the financial matters and facilitating and reviewing their execution. So financial management, according to the Raymond, what is telling? Financial management is about controlling and taking the decisions regarding what? Regarding the financial matters. For what reason we are going to take? For having the procurement, that is facilitating and reviewing the execution of the expenses in future that we are going to get, and so that we can get the maximized returns on whatever the investments that we are going to make in future. So this is a basic definition of the financial management. Now we'll see what are the goals or what are the aims of the financial management, that is financial, why we need to implement the management functions, that is the financial management functions in the organization. So first is about acquiring sufficient and suitable funds. So the basic objective or the basic goal of a financial management is what? To acquire the sufficient. So this is important, sufficient and suitable funds. Okay. So say for example, so as a company, you need some money. Okay, so in order to run some operation in your company, say for example, you want to buy or you want to purchase a new plant, that is your manufacturing plant. Now you need money. So what you're going to do to make sure that you're going to have money on your hands? So first thing, you're going to take the loan. Okay, so or else like you're going to ask the money, borrow the money from the your investors. So what kind of money you're going to ask for? Through shares. Okay, so now what kind of shares you are going to call for, whether it is preference shares or equity shares. So we are going to decide it. So financial management is all about what? Deciding the proper sufficient money and which has been suitable for purchasing of that plant, and so that you can run your operations in your future. So that's the basic objective. So we'll see the primary aim of the financial functions is to assess the needs of the firm properly. For the need of the firm is what here? They need to purchase a plant. So for what? For to have a extension or to maximize the production of the company. So for that, what they are going to do? They are going to ask the money, whether they are going to take the loan or they are going to issue the shares to in the markets, and they can get the money from the investors, and they can rotate the money from whatever the investments that the company have got from the investors, and they are going to pay the profits in the form of a dividends to the investors. So this is usually the cycle that usually happens. So the primary aim is what? To fulfill the needs of the firm and procure the funds in time. Okay, procure the funds in time. The time is also an important element in the meeting of the needs of the organization. So as I've told, so you need to purchase the plant now. But if you're going to do in the future, but you're going to need the money now. But if that thing has not been aligned properly, then that is a waste of money for you and it's a waste of time for you. So it should also have a time constraint and it should also align with your proper timing management. So this is the first aim of the financial management. Next is proper utilization of funds. Okay, proper utilization of funds. Now we'll take the same example here. So you have acquired the loan or you have acquired the borrowings from your investors. So your investors have invested in your company, like say for example, they have invested like 10 lakhs. Now, so you have to properly utilize the purchase of the plant, whatever the money you have got. So you have got 10 lakh amount here now, then it is in the hands of the company people, that is the CEO or the CFO. So they are the persons who are been responsible for spending the amount in responsibly so that cannot be wasted. So the one more aim is what? Proper utilization of the fund so that it cannot be wasted and there is no such kind of scams or no such kind of personal expenses that cannot be met with the investors' money. So that's the one of the aim of the financial management. Next is increasing profitability. Okay, this is also one of the main goal for financial management. Okay, so why we are going to adopt the financial management techniques? Obviously, to have a profit in your hand, to earn more and more money. Okay, that's the basic objective to wealth maximization. So financial management, why we are adopting here, so that we can get more profit in your hands. Next is maximizing the firm's value, that is the value of the firm, that is goodwill of the firm. Okay, so like say for example, if I give the name of Tata, if I give the name of Reliance, or if I give the name of any ITC group, so those are such a big companies that have managed their finances very well that, so if I tell their name, some kind of goodwill or some kind of good opinion that you are going to get in your head. Okay, or get in your minds. So if I tell about Tata or Reliance or ITC companies or any stock market companies that are having the highest price share value in the market. So those are the companies that have managed their finances very well and they have gained such a goodwill in the market. So financial management helps in maintaining or maximizing the image or value of the firm. Next is about the importance of the financial management. First importance is what? Financial planning. Okay, so whatever the planning that you are going to make. Okay, so whatever, like say for example, in the previous example I have told, so you are going to purchase a plant, a manufacturing plant here. So our basic importance is what here in the hands of the financial management is to have a proper planning, when to purchase it, why to purchase it, how to purchase it, and what is the need of the purchasing of such plant. Okay, so if you're having the proper responses for all these questions, then you're having a proper planning in spending the amount in the wealth maximization, that is acquisition of the asset. Okay, so first is about the financial planning. Financial management helps to determine the financial requirement of the business concern and leads to take a financial planning of the concern. Okay, so the basic objective or the basic importance why we need is because it can helps you to understand what is the importance. So what is actually you needed for your company or for your organization. Okay, so it helps you to understand the requirement, the need of the company, what is actually needed, and it will also helps for the financial planning of the concern. Next importance is what? Acquisition of the funds. Financial management involves the acquisition of required finance to the business's concern. Acquiring needed funds plays a major part of the financial management, which involves possible sources of finance at a minimum cost. Now, acquisition of the correct type of funds. Okay, so as I have told here, so we have different kind of funds that we can acquire from. So we can take loan, we can borrow from shares, we can get the loan from the government. So like that, we have different kind of options that we have in our hands. So now, as the most important function of the finance is what? To pick a right decisions regarding the acquiring of your funds. What kind of funds you need. So if you're going to issue the preference shares, what kind of preference shares you are going to issue? Or if you're going to issue the equity shares, what are the different kinds of equity shares that you're going to issue, or if you're going to get the loans, so what, for how many years you're going to get the loan. So like that. So the basic importance of the financial management is what? To understanding and to have a decisions regarding the acquisition of funds that you're going to make for fulfilling the needs of your businesses. So this is the second importance. Next is proper usage of the funds. So the same thing which I can tell you, the same goal of the financial management as well as the importance is what? Proper utilization of the funds, so that cannot be wasted in vain. So with the help of the financial management, so that there will be a proper utilization of funds, so that there will be no such kind of personal expense or scams or no sham is been there inside the transactions between the company and the investors. Next is about the financial decisions. So the basic importance of financial management is what? To have a proper financial decisions. So financial management helps to take a sound financial decisions in the business's concern. So financial decisions will affect the entire business operation of the concern. So as we know that, so whatever the financial decisions that you're going to take, that is going to affect on your company or your businesses. Okay, what kind of financial decisions you are going to take. So if you can take the example of the Satyam case, so they have taken the decisions like which will be hurting the trust issues of the investors. So they have taken such kind of decisions that have affected the company and that resulted in closure of the company. And that is the reason why proper financial decisions is very important here. So financial management will help you to take the reasonable or logical financial decisions for the betterment of your company. Next is about improve the profitability. So as I've told, the basic concept or the basic importance or the basic objective I can tell for managing the finances is what? To get a profit. So whatever the businesses that you're going to make or you're going to start, the basic objective is what here? To get the profit from the transactions or the expenses that you have made. So with the help of the financial management, you're going to attain the profit quotient for your businesses. Next is about the increase the value of the firm. So as I've told, so financial management will helps you to increase the goodwill of your firm. Next importance, promote savings. So it also helps the company or the organizations to have some reserves in their hand. Okay, so you might be knowing, like if you have taken the balance sheet, so there we have got reserves and surpluses. So in that, the reserves column, you will be having general reserve, interim reserves, like that. So it helps you to save some reserves for your company so that can be utilized in the future purposes. So those are the importance of the financial management. Next, we'll talk about the functions of the financial management. Under that, first is about forecasting the financial requirements. So forecasting is just nothing but analyzing what kind of financial requirements we are going to need it. So we can take example like the previous example that I have taken, purchasing of a plant. So now how can you tell that you need a plant? So based on the production capacity that you are going to do currently on your current manufacturing plant. So how much you are doing, what is your output, what is your goodwill in your company already that you have attained, what is the demand that have been raised. So in order to meet the demands that is already there in the market, you need more and more production outputs. So in order to do that, you need to have more and more raw materials, more and more machinery that need to be installed in your plant, and likewise, so in order to meet the demand for your product in the market, you need to have more output. So now for that, you have decided that you need to purchase a plant. So when you're going to decide it beforehand itself, so it will help you to forecast what are all the financial expenses that you're going to get in future. Okay, so if you can take the examples of the personal life, so as a salaried person, you also will be having the enough knowledge that what are the different kind of expenses that you might get in future. Okay, so rent related expenses or grocery related expenses or insurance related expenses or anything. Okay, so as a person, you are going to invest in the company or invest in the kind of shares, so you will be having enough knowledge about what kind of risks that you're going to get in the future. So financial management will help the company to forecast about the requirements that you're going to get in future. Next is acquiring the necessary capital. So one of the function is what? To acquire the necessary capital, that is the correct type of a capital, that is what kind of capital, like say for example shares, what kind of shares, what kind of equity shares, what kind of preference shares, what kind of loans, so what kind of commercial papers or what kind of bills that you're going to get in the future. So all these can be easily known with the help of a proper planning in the financial management. Next is investment decisions. So investment decisions, it helps the company to have a proper knowledge about investments decisions, what kind of investments that they're going to make. So asset investment, land investments, or share investments, mutual funds investments. So all these can be easily known with the help of the financial management. Next is cash management. So daily transactions of the company will be helpful in order to forecast regarding the cash management, cash expenses that they are going to get. Next function, interrelation with the other departments. So financial, the more important source or power for any kind of a businesses. So in order to run your business, you need the main fuel called money. For that money, so you need to have a proper planning. So only one department cannot plan that. That is, only finance department cannot plan that. You need to have a proper finance department, you need to have a operations department, HR department, administration department, like that. So finance is that one point that usually having a interconnection between all the departments in the company or in the organization. So these are the important functions of the financial management. Hope you're understanding the concept now. Next, we'll move on to the steps in a financial plan. So what are the steps that we need to take? First step, determination of financial objective. Okay, so as I've told, financial management will always give you the ideas or will always give you the signs that what kind of financial requirement you need in the future. So once you get that, so first thing is what? To understand your objective or a goal. So here, what is your goal? To purchase a plant. So first thing is what? Determining your financial objective. For what purpose you are going to purchase the plant? In order to increase your output. Correct? So in order to increase your output. So if you're increasing your output, then there will be more products in your market. So if there is more product, then more demand. If there is more demand, then more share in your market. So if there is more share, then more profit. So like that, everything is interrelated here. So first thing is what? Determination of the financial objective. Next is what? Estimating the amount of capital required. So how much amount you are going to need. So I have told here, to purchase a manufacturing plant, you need 10 lakhs. So how we are going to do it? Through valuation of the plant. Okay, you will be analyzing that what kind of square feet, how much square feet you're going to purchase the land, what kind of equipment, so how many departments will be there, so what is the process of your production thing. So all this is about valuation of the plant. So you're going to analyze the estimated amount for the purchasing of the plant. Next step is what? Determination of the sources of capital. So what are different kind of sources you are going to get. So where and all you can acquire the capital. Okay, through bank, through financial institutions, or through share market, or through investors, etc. Next step is what? Determining the capital structure. So determining the capital structure, like what kind of capital that you're going to take. So how much capital you're going to get, that is how much money you're going to get. So what kind of sources of capital you're going to get. So all these will be determined under this step. Next is about formulating the financial policies. So your financial policies, say you are borrowing the money from the investors. So now you need to repay it to them. So now here there should be a contract between you and the investors here. So in order to have a proper relationship with them, you need to have a proper regulations, that is policies. So you need to have a proper paperwork for it. So determining what kind of financial policies you're going to give, when you're going to give the dividend, how much percentage, how much interest, etc. Next is about designing and developing the financial procedures. So designing, that's what I've told in the previous step. So designing about what kind of sources that you're going to get from the capital, what kind of capital you're going to get, and how much you're going to pay to them. So regarding the interest, regarding the contract, regarding the paperwork, etc. Next step is reviewing the financial plan. So last step is what? Again, reviewing the overall financial plan and making the changes if you are needed in order to acquire the capital. So these are the basic steps that you're going to take care for getting the proper financial investment in your company. Next is about the essentials of a good financial plan. First essential, simplicity. That is, this should be simple to understand, should not be any kind of complicated one. So if you're going to get the money from your investors, so what kind of investors? Who are they? So what kind of shares you are selling? That's it. So it should be kind of simple and it should be easy to understand for the investors as well. For what purpose you are going to purchase the asset, or for what purpose you are going to borrowing the money. So it should be easily understandable and simple to analyze your plan. So that is your previous step. You have done that proper financial plan, right? So like that, it should be kind of a simple in nature. Next essentially is foresight. So that is forecasting. So it should be having a forecasting of the expenses. So now you have taken the money from your investors. Next what? So next you have to invest in your company. So how you are investing? So how you are dividing the capital? So how much you are investing in what? How you are going to rotate the money? How you are going to get the profits from the investments that you have taken? So forecasting of all those is a important plan. Next is about flexibility. So flexibility is also one of the good feature for a financial plan, because future is always uncertain, correct? So we might not be knowing what kind of risks we are going to get. So there will be certain risks and uncertain risks. So now here it should be kind of flexible in nature. It should not be kind of a rigid one. So whenever say for example, you want 10 lakhs rupees. So now you are calling for the investors. So you have got only 9 lakh now. What you're going to do with the 1 lakh? So it should be kind of a flexible one, and you can adjust the money when and where you want to get, and you can easily change the plan. Next about long-term view. So it's about if you're going to acquire the investments from your investors, it should be having for the long-term purpose. Okay, so for the short-term purpose, so it is like it's another kind of an investment that you're going to take. So whatever the investments that you're going to acquire from your investors, you should be having a long-term view. So you're purchasing the plant. So it's not just you're going to run the plant for just for 1 year or 2 years. You're going to run it for a longer period of time, correct? So it should be having a proper long-term plan in your financial plan. Next is optimum use. So one of the important plan or one of the important feature in the good financial plan is what? Optimum utilization of the resources. That is your financial resources. So you have taken the money from an investor. Now you have to having a proper idea about what and when, where you are going to utilize the money. Next is liquidity. Okay. So liquidity, as you know that it can be easily encashed. So when you got the investments, so now you have invested in the plant. But right now, other reasons like some of the other reasons, your plant is not operating very well. So now, what you should be doing now, you might be selling the plant, machinery. So that you can get the cash, whatever the investments that you have taken, and you can repay your borrowings or loans that you have taken. Your plant should be having a proper liquidity stage. Next is about objectivity. So your financial plan should be having a proper objective, goal, what you want to do, why you are taking the investments, for so and so purpose, for what reason you are taking, so and so purpose, what you are going to do from the investments that you are getting, so and so purpose. So like that, there should be a proper financial goal or objective to it. Next is about cost. So for every kind of an financial plan should be having some expenses. So what kind of expenses you are going to incur? Okay, so what kind of transactional expenses itself or variable expenses that you're going to get, all these should be forecasted in beforehand itself. Next is profitability. So one of the important feature for a good financial plan is what? To acquire a profit. So now here, good financial plan should be having a capability of earning good profits for a organization. Next is completeness. So it should be having a complete procedure regarding the complete procedure in the sense like complete details about your financial plan. What is about your financial plan? Like in the previous step, we have taken step by step. So such that any investors can easily understand and they can easily identify that it has been completed. Okay. These are the important essential features of a good financial plan. Next, we are going to talk about the factors that influences the financial plan. So we have two kind of factors, that is internal factors and external factors. Under the internal factors, first is regarding the personal factors. Personal factors plays a kind of impactful role on the financial management. So why? Because some people like here regarding their personal expenses that they're going to get, regarding the age related or regarding the health related, etc., they're going to affect the financial planning. Okay, so personal aspects like their family aspects or age related, as I've told, or health related. So they're going to affect the financial planning that they have already planned. That is the personal factors. Next is age. So as I've told, age also plays a very important role here. So age, because based upon the investment opportunities that you have got and what is the age of your investor. So based on that, the factors will changes. Next is regarding number of dependents. So number of dependents like your family. So based on that also the factors will be changing. So if there are more number in your family, then there will be more expenses. That again will be a boon for your financial planning. So that's why number of dependents are also plays a very important role in the financial planning. So those are the internal factors. Next we'll understand the external factors, that is economic growth in the country. So economic growth also plays an important role. Why? Because based on the economy, based on the GDP, based on the flow of the money, on that we are going to get the returns on whatever the investments that we have made. Okay, so economic growth is also important based on the investments that you have made. Okay, next is about political issues. So political issues also plays an important role. So based on the government that the particular state is going to form, based on that also the financial plans will be changing. The share markets will be changing. Next is interest rates. Interest rates is also plays a very impactful role here actually, because based on the investments that you have made, so now you need to get the returns. So you're going to compare it. So how much percentage of the returns that you're going to make, or if you're going to get the loan, so based on that how much interest rates that you're going to acquire. So based on that also the financial planning will be changing. Next is inflation. So inflation, you might not notice that, but inflation also plays a high impact on the financial planning. So inflation is about like paying the higher prices for the for basic commodities or for anything that we're going to purchase in the market. Okay, so as we know that in the backer olden days we used to have a more value for a single rupee. Nowadays we don't have such. Why? Because inflation rates. So every prices of the commodities or every price of the raw materials has been increasing day by day. So inflation also plays a important role here. Next is global issues. So global issues also plays an important role because based on the international stock exchange. So we know that like US, Europe, UK, these are the big players that usually control the stock market. So based on them also the stock market will be changing. Okay, global issues also plays a very important role here. So those are the basic concepts of the financial management. So we have learned about the importance of the financial management. What is the aim, that is goals of the financial management. So like what is the most important features or aims for a financial plan. And we have also learned about the steps that usually incur for a proper financial planning. So those are the important topics that you need to understand. So before we move on to the deep concepts about the financial management, in the coming session, we are going to learn about the time value of money. That is your second unit. So under that, we are going to learn about the concepts of the time value of money. What is a calculation of the money according to the time. Okay. So I have given an example, right? So here, 1 rupee is not having that value in the back days as compared to the current days, correct? So as and when the time is been increasing or as and when the time is been passing out, the value of the money will be increasing or decreasing. So we are going to learn about how to calculate the money based on the time. Okay, so we are going to learn about simple interest, compound interest, and what is annuity, etc. So all these are the important concepts, especially the calculations that needs to be understood by you for your examination point of view. So second unit is all about the time value of money. So I'll meet you in the next session. Thank you so much.